So here in question 5, what I've done is I've used my snipping tool to take a picture of the bottom part of the problem, and then that way I can see both the top and the bottom at the same time and makes it a little bit easier to work the problem. And so we're preparing a statement of cash flows, and we always begin with the operating activities section, and in that section we begin with net income. So over here we see net income is $1,190. Now this is accrual basis net income, and to get this amount, the company reported all the revenues earned and the expenses incurred, regardless of whether or not they received all the revenues in cash or paid all the expenses in cash. So in other words, this is not cash basis net income. And so we're going to convert it to cash basis net income through these steps in the operating activities section. And the first thing we're going to do is add back depreciation expense, because that's a non-cash expense. When we record it, we debit depreciation expense and credit accumulated depreciation. So there's no cash involved in that entry. It's a non-cash expense. And since it was subtracted to get to this net income up here, we're going to go ahead and add it back as part of our conversion process of converting to cash basis net income. Then what we're going to do is go to the balance sheet, these comparative balance sheets, and we're going to look at the non-cash current assets, the changes from last year to this year. And we only have one non-cash current asset, accounts receivable. And you'll see that the balance decreased by $870. And so I've written that amount here, decrease, or that description, decrease in accounts receivable, $870. And because with the current assets we do the opposite, then I'm going to add the amount of the decrease. Now that's the only non-cash current asset because equipment is a long-lived asset. So now we'll go on to the current liabilities, and there are two of them. So accounts payable, actually both accounts payable and salaries and wages payable decreased. And with current liabilities, we do the same. In other words, we're going to subtract the amounts of those decreases. And then finally, we had a sale of equipment, and you need to be on the lookout for the sale of long-lived assets, looking to see if there were any gains or losses. And it says in paragraph A that the equipment was sold. It had a cost of $1,360, accumulated depreciation of $270 at the time of sale. And so I subtracted the accumulated depreciation from the cost to get book value. And then because I received less cash than the book value, I knew I had a loss of $570 loss. And that loss did not represent cash being paid out of my company. That was a paper loss. And so I'm going to add that back, because that loss was subtracted to get to accrual basis net income. And since it was not a loss of cash, I'm going to add it back here. And in doing so, I'm going to finish converting my accrual basis net income to cash basis net income. However, the label I'm going to use here is net cash provided by operating activities. And I'm using the words provided by because this amount is positive. Down here in the investing activities section, you'll see this amount is negative. So I've changed my label to net cash used in investing activities. So going back to the beginning of the investing activities section, I had two investing activities. I bought equipment and I sold equipment. But all I'm going to report here is the cash that I paid to purchase equipment and the cash that I received from the disposal of equipment. So here's the cash that I paid, and I put that in as a negative amount because that's cash leaving my company. The cash that I received for selling equipment goes in as a positive figure. Finally, I'll complete my financing activities section. The company borrowed $1,100 from the bank, so that's a financing activity. And I entered that as a positive amount because that was cash coming in to the company. That gave us $1,100 positive in net cash provided by financing activities. And then what I'll do is I'm going to combine these three amounts, net cash provided by operating activities, this figure here, and this figure here, to get to my net increase in cash during the year. And then to wrap this up, I went ahead and entered the cash balance as of the beginning of the year, which I obtained from this column in the balance sheet. So this was the cash as of the end of last year. That amount would become the beginning cash as of this year. And then finally, when I add the net increase in cash to the beginning cash balance, I get my ending cash balance, which you'll see agrees with the ending cash balance here on the current year balance sheet.